what you can do to get a mortgage without losing your mind. So basically, there are 4 pieces to the mortgage puzzle. You have your income, your credit, your assets, and the property. What we'll do is kind of go through each piece of the puzzle, helping you put it together and hopefully prepare you to take that next step into homeownership. So first piece, credit. Ideally, you want to be at least 700 scores minimum. You don't have to be. You can go as low as 580. Yes, there's lenders that will do that for you. However, the hoops that you have to jump through really do become pretty painful. So again, the main thing here that we're looking at is going to be keeping it simple. The other thing is that you want to make sure you have some established credit, meaning you have some trade lines, credit cards, student loans, car loans, whatever it may be, at least 24 months. You want to have something established. Now, when you're looking at the income piece of the mortgage puzzle, what you want to do is prove that you have a verifiable, consistent income over the last at least 2 years. If you're a commission employee and you've only been making commission for maybe a year, it's going to be difficult to prove the likelihood of that income to continue. So wait till you have the 2-year history to be able to look at getting a mortgage approval. When you're using bonus or commission or overtime income to qualify, you want to show some sort of consistency, some sort of stability. Because when you had $50,000 last year in bonus income, and this year you're only pacing towards $25,000, obviously that's a drastic reduction. It shows that it's not really consistent, so it's hard to tell what it's going to be moving forward. How you doing? Adam here. Tell you what, you come sit down with me, we'll do a mortgage together, have some fun. Now, one thing that I gotta tell you is, nowadays there's just no inventory. You come in, you want to look at some listings, and next thing you know, the houses are gone. And then what do? You try to build a house, and what happens then? House falls through because there was a sinkhole. So the one thing that you want to do is this: you want to get yourself a good sturdy cardboard box. A. Number 2, you want to make sure that you always. So now talking about the asset piece of the mortgage puzzle. Assets, talking about down payment, closing costs, escrows for taxes and insurance. Sometimes you have to have reserves, things like that. So when you're thinking of assets, it's not necessarily just down payment. Now the other part of the asset piece is that everything needs to be verifiable, just like the income part. You can't just say, oh well, I got this money under my mattress, I keep it at home because I don't trust banks. Okay, but we need to know where it came from. So the way that lenders verify the source is that we see a couple months bank statements. Now if there's any large deposits in your bank accounts, the lender's going to ask where it came from. And the main thing with it is, can it be verified? Is there a paper trail? Can you prove where the money came from if there were any large deposits? Now if you already have the funds in there, then it just keeps it simple for you. So you want to prepare, you want to get your ducks in a row ahead of time just to make sure you're doing everything that you can to minimize your stress and anxiety when it is time to buy. Alright, here we are, last piece of the mortgage puzzle, the property piece. The home is the collateral that's used to secure the financing. So the lender is going to want to make sure that it's worth what the contract says and that there are no repairs needed. What's going to happen is, obviously you want to get an appraisal done just to make sure you're getting a reasonable price on the house. A lender's not always going to require it, but it's a good idea to get an inspection, just a general inspection. Your realtor will have somebody that they may like, that they use, or your lender might if they're local. But it's definitely in your best interest to get an inspection because there's so many things that you could miss that could be a big problem that could be very costly for you. And an inspector is going to go through and find those things. Foundation issues, electrical, are things up to code? Is everything okay with the property reasonably? On the appraisal piece of it though, if there are any repairs that are noted by the appraiser, then those items would need to be addressed and fixed. Usually you want to have the seller fix it. You don't own the property at that point. There's no point in you doing a repair on something that you don't own yet. It doesn't make sense. So, but the lender is going to want to see that those are repaired because they take the advice of the appraiser. That's what they're hired for. So that's pretty much it. At this point, I would say you're probably an expert and you're ready to buy a house. It's going to be a breeze. So good luck to you. Good job. It's been fun. But seriously, I know that was very general on each piece of the mortgage puzzle, but it just gives you an idea of what you're getting into. Coming soon, we'll go through each and every piece in detail so that you can get your questions answered. And of course, if I don't answer them, you can always reach out to me directly. I would love to chat with you. A few tips to end with. Definitely recommend using a realtor. They're going to save you time, save you money. Why wouldn't you work with somebody who does it every single day? Next tip would be when it is time to buy, make sure you're just willing to provide the documents that the lender asks for within a timely manner. It just helps things go smoothly. It makes everybody's life easier. One last tip is that remember that all the pieces in the mortgage puzzle need to fit together. Even if one piece is off, the whole thing's going to fall apart. If you're buying a $50,000 home, you make $100,000 a year, and you have $1 million in the bank. If you have a 500 credit score, there's going to be some bumps in the road. It might be best to fix those things prior to. Look forward to seeing you soon. Look forward to you seeing me soon. Appreciate you watching, and we'll learn some more coming up. Thank you.